Now let's talk about some names on the move. Jenny Horne, host of Next Gen Investing, is with me this morning, and we'll start to take a look at some of the movers. Supermicro, this one is down big time, released preliminary earnings here. So let's take a look.
Yeah, this is a pretty brutal move to the downside, which is only being exacerbated like everything you and Kevin just talked about. But Supermicro falling pretty sharply after the company did say its earnings for third quarter will likely be far below what the street had been expecting. So shares plummeted as much as 17%, as you can see perfectly from the intraday chart here. If losses do, though, hold as we open, it would mark its largest one-day drop since February of 2020. Excuse me, this past February, the 27th. So Supermicro did say it expects for the March quarter its revenue to range between 4.5 to around 4.6 billion. That would be almost $1 billion lower than what it had initially expected, as well as adjusted earnings per share between 20 and 30 cents. Again, well below the 53-cent expected. So they attributed the shortfall to delayed customer platform decisions and their servers. Of course, this is hugely important because their servers often house NVIDIA's chips. So that suggests that the issue could be somewhat around, or at least surrounding, NVIDIA's old Hopper hardware and its new Blackwell processors, although that is right now just speculative. So that is not necessarily indicative or being, I would say, a catalyst of this report, but I think it doesn't necessarily read extremely well for a company with the exposure to Supermicro that NVIDIA does. But as a result, we did see some analysts adjust their targets pretty substantially. Mizuho was one lowering their target to $34 on Supermicro from $50, saying companies are moving slow to set up these Blackwell or these GP200 and H20 chips, as well as this competitive pricing they highlighted from Dell pose near-term challenges for Supermicro. So they have a neutral rating still. I saw a lot of analysts that are actually keeping their conviction, reducing their price targets, but this name peaked at around 118 in early 2024. So what a fall from grace, unfortunately, we have seen and witnessed here for Supermicro.
Look, this is going to be the worst day for this stock in I don't know how many months. It says since February, but down 20%, may even be more than that. And, what does it really mean for the AI trade, the tech trade overall? They felt compelled to sort of give us a glimpse into how bad their numbers are going to be. Pretty interesting.
I know. I do think, I wonder if it's because of all of their reporting mishaps, the somewhat lack of trust of transparency with this company, if now they're feeling like they have to have their due diligence and give an initial warning. I mean, because, yeah, I think there's two ways to look at this. A lot of times we can see companies give this forewarning and then shares actually do quite well on the back of earnings. Or right now they were saying, look, the situation is worse than even we had feared, and they're just being transparent after several months of the street really questioning that transparency.
All right, Jenny Horne, how about this one? How about Starbucks? This one lower after the report from last night.
And I think that there was so much riding on this transition of Brian Niccol and some of his overall expectations for the company's turnaround, which is definitely underway from these results, but perhaps just not enough. And Starbucks is a great example of a company that has underperformed and is continuing to see this weakness. It's not always like if a bar is set low for your earnings that anything, it will allow you to move to the upside. And it doesn't help that we're seeing some substantial, again, pressure in the overall markets, but they missed earnings. They missed revenue estimates for their fiscal second quarter. Same-store sales fell for actually their fifth straight quarter. However, Brian Niccol did still say they're seeing momentum in their turnaround, though this effort will pressure their forward-looking earnings. So they said their financial results don't yet reflect this progress, but we have real momentum in our Back to Starbucks plan. He did say they're testing and learning at a speed, and right now we're seeing massive changes in our coffee houses. Some of those tweaks do include automating more of their processes, actually increase or lowering their wait times by about 2 minutes at some of these stores where they've piloted a lot of this technology. So that's incredible in itself, but still facing external challenges. I mean, you have not only the tariffs expected to hit coffee beans, but you have consumers that right now are trying to be more cost conscious. And as we know, about 10 to 15% of Starbucks' products and distribution costs do come from this raw or green coffee. So they are definitely going to see some hit if we see things progress as they are right now. Obviously, there's still a lot of unknowns there, but I think that with the conscious consumer we keep talking about, maybe the swing consumer, someone like myself that doesn't go very often, is avoiding a Starbucks now because frankly, Nicole, I joke I go like only once a quarter when they report earnings, and every time I go, I'm just shocked at how much it costs. So it's one of those things that I know is a staple to some, but I think the majority of us are more infrequent users and say, hey, this is something we could pull back on right now in light of perhaps higher prices.
Everything costs so much. Everywhere you go, you find out that everything was a little more than you thought. But yes, it's a pricey sort of nice luxury to have if you're having Starbucks every day. Jenny, thank you. I am seeing targets. Barclays trimmed the target to $98, Stifel $92, TD Cowen $90, BMO 100. And the BTIG, I see 105. So there we have it. Those are some of the price targets now. It's at $84 at this moment. And in the after hours, $76. Jenny Horne, great to see you. Thank you.